Michigan State Representative Brenda Carter, and I'll be chairing this meeting today. There's no need to take roll call. Staff will mark everyone's attendance. First, I'll entertain a motion to waive the quorum requirements, then a second, then a voice vote. So move? Second? All right. All in favor, say aye. Opposed, same right. Okay, motion's carried. Now I'll entertain a motion to approve the April 25th, 2025 meeting minutes. Then a second, then a vote. Do I have a move? So move. Second? Okay, all in favor say aye. Opposed, same right. Motion carried. We'll begin with an introduction and discussion on the NCOIL Model Act regarding life insurers' use of genetic information. You can view the model in your binders on page 19 and also on the website and on the meeting app. In Charleston, we had an informative presentation on this issue, and now I'm pleased to say that we have a draft model for discussion that I'm proud to sponsor. As I mentioned in Charleston, this is a topic that has generated a lot of discussion in states across the country and in recent years. In light of this, I think it's great timing for NCOIL to discuss this issue with an eye towards providing states guidance when they discuss this with their legislatures. As you can see from the model, it's fairly straightforward in that it does not seek to outright prohibit life insurers' use of genetic information. Rather, it sets forth what I think is some reasonable guardrails around such use. And this is based on the approach of the Tennessee model that we followed with their law and was enacted a couple years ago. I'm certainly open to hearing about any potential changes, but for now, I think it's a good starting point, and I look forward to the discussion. Today, we'll hear comments on the Model Act from a patient and for insurer's perspective. We have a microphone announcement?
Yes. Hi, I apologize for interrupting. Our audiovisual staff has asked that if you use the microphones and move them, please move them by the base. And there's one button on and off, so when you're not using the microphone, please just turn it off to save the load on the AV system. Sorry about that.
No, thank you, Ann. Okay. Today, we'll hear comments on the model from a patient and insurer's perspective. First, we'll hear from Alex Meixner from the ALS Association, and then from Jan Graber from the American Council of Life Insurers. We'll hold all questions until both are finished. So, Alex, please go ahead.
Well, thank you. There's one button if I could find it. All right, are we on? Perfect. Hiding at the bottom. All right, thank you so much, Representative Carter and members of this committee. It is a pleasure to be here. Again, my name is Alex Meixner from the ALS Association. And what I'd like to do today is walk a little bit, very briefly, through what is ALS, just to do a very brief primer, and then talk a little bit about genetic testing, its rise, its increasing commonality, what it can tell us, importantly, what it can't tell us, and then move into the meat of the draft bill, which we think is an excellent start. We've got some ideas about how it could be made stronger and more effective from the patient and consumer perspective. But again, I want to reiterate my gratitude for you all having this conversation, Representative Carter, for you starting this conversation. I think it is a perfect time to do so. And with that, I will move right along. All right, so briefly, ALS, if you're familiar, amyotrophic lateral sclerosis, also known as Lou Gehrig's disease, has been around a very long time, and it has had very few treatments or cures. There was one FDA-approved treatment about 40 years ago, a second about a dozen years ago, a third and a fourth within the last couple of years, and it is this kind of rate of advancement that has us excited at the association that we are going to near and hopefully meet the date where we are not only able to treat and delay the harms of this disease, but actually turn it into a chronic disease and then hopefully turn it into a thing of the past. Our mission is to make ALS livable for everyone, everywhere, until we can cure it. And because of the advance in science, not least of which genetic science, we think that that goal is no longer purely aspirational. We think it's within sight. I won't belabor you with all the details of ALS, but I will say this. As of now, about 90% of cases are what we call sporadic. We don't know where they come from. We know that military, both active duty and veterans, are about twice as likely to develop and die from ALS, regardless of branch or type of service. So whether you're at a recruitment office in Oklahoma or serving front lines in a war zone, the impact on your likelihood of developing ALS is the same. We're not sure why. Similar with ex-NFL players are 2 to 3 times as likely. There's a lot of research happening, both federally funded by us, and then funded by private industry into figuring that out. But part of the process of unlocking that puzzle, of turning over the puzzle pieces, has been the advent of genetic research. A number of years ago, there really weren't any genes identified with ALS. Then there was one, and now there's up to, I believe, 30 that have been identified. And once the genes are identified, that's when we get to really the hard work of identifying cures. So, when we talk about genetic testing, it seems like it's been around for a while, but really it's relatively new, right? Now, the science of genetics goes back hundreds of years, but the real, catalyst for genetic testing was the completion of the Human Genome Project, which was just about 20 years ago. And as you can see in this graph, the number of genes that are specifically identified and are identified with a specific disease has been rising at an incredible clip year over year over year since then. And this is just getting going. As, again, science is progressing, we are going to have more genetic markers that are going to be identified with more diseases. It will become not the exception, but the expectation that most diseases hopefully will have, if they have a genetic link, that link will be known. And those links are going to lead to research. One other thing it is important to note here, when we're talking about genetic testing, it is now not uncommon for it to happen when people are newborns or are still kids. So when we're talking about the universe of folks that are getting genetic testing, it is not just an issue of people choosing to go and have their own genes tested. It is often an issue of having that choice made for them by parents for good medical reasons, or when they were much younger. But then they've got to live with the results of that, right? That their genetic code, their genetic tests will be in their medical records for the rest of their lives. So that is something to keep in mind. This is an issue that is starting to bubble up now. It is going to become more prominent and more common as more genetically linked diseases are discovered and as testing becomes more common itself. So, one or two things that are worth digging in here, and I'm not going to read through the slides. You all have them to peruse at your leisure. One important place to start, the universe of people getting insurance is the same as it was before genetic testing was a thing, right? So the life insurance industry is I think it predates actually the founding of our country. I think the first life insurance plan in the US goes back to like the 1750s, something like that. Genetic testing is relatively new. So this industry was built and was built to thrive on not knowing the results of genetic tests. So, I would say that having that information isn't crucial to the market because the market was built without it. That said, we do want to make sure that we are, taking advantage of this information from a health perspective, and I think it can make some sense to look at it from an insurance perspective as well, but we want to do so carefully and cautiously. When we're talking about a positive genetic test, that doesn't necessarily mean you're going to develop a disease. It doesn't tell you when you will develop that disease. It doesn't tell you how severe that disease might be. I can speak to ALS. If you buzz positive for one of the genes that we know to be associated with ALS, it might be something like a 40% likelihood or 60% likelihood or some other variant of likelihood depending on the gene that you will one day develop that disease. Now, ALS can happen at any time. I have met teenagers that have developed ALS, and I've met folks that are well into their 80s before they develop ALS. Again, it can strike at any point in your life, and we don't know yet what kind of triggers it. So having a genetic marker means you have some potential of developing a disease at some point in your life. And it could be next week, it could be in 50 years. What genetic testing also can't tell us is what science is going to do between now and the date that you develop your disease. So when genetic markers are identified with a specific disease, that's not the end of the road for science, right? They use that information to then test, develop clinical trials, and hopefully try to mitigate or cure those diseases based on that genetic discovery. So if you've got a positive genetic test today, the hope, if things are working the way they're supposed to work, is that science will start tomorrow, and maybe next year or in 5 years or 10 years, that science will turn into a treatment that's going through clinical trials that hopefully will then turn into a therapy or a cure. So again, having a positive test result today doesn't tell you when or how effectively these conditions might be mitigated or cured down the road. So as we're building out the risk profile for folks with a positive genetic test, we have to take into account what we don't know, but what we can surmise. What we can surmise is science and medicine are going to continue marching forward, and the identification of genetic markers, and the more folks with the genetic markers that are able to raise their hand and say, yes, I will participate in a clinical trial, is going to speed along the process of discovery that's going to turn those folks from people that are certain to pass once they develop their disease into people who have a chance at survival. And I'll give a specific example of that momentarily. And here it is. So when I mentioned before that there are just a few treatments available for ALS, the newest of them, something called Qalsody, developed by, on the market right now from Biogen, was approved by the FDA about 18 months ago. The stages of research for this began a little less than 10 years ago. It ran through clinical trials. It then had its confirmation study, its first confirmation study, published earlier this year. Now, what's new and different about this specific therapy for ALS, it is the first one that doesn't just slow down progression. In ALS, it's a neurodegenerative disease. Normally, you get it, and then slowly over time, you might not be able to pick up your pen or grip it quite as well as you used to. Then you'll stop having use of your hands and feet. Eventually, you won't be able to walk. Eventually, you won't be able to talk. Eventually, you won't be able to breathe, and that is what will kill you with ALS. What Qalsody is able to do is not only arrest the progression of the disease, so once you get on this medicine, we're seeing that patients aren't continuing to lose function. But not only does that happen, we are seeing some patients that actually are regaining function. Now, this is a new disease. We need some longitudinal studies to say how effective it is over time, but this is a proof of concept that a genetically driven therapy for as tough a nut to crack as ALS is, which is one of the most confounding diseases out there, is possible, right? So if somebody had gotten a genetic test for SOD1 ALS 3 years ago, their prognosis would have been, well, at some point they're going to develop this disease, and once they do, they're going to have a 2 to 5 year life expectancy on average. Some people live 20 years with ALS, some people pass much sooner, but that was the expectation. Today, if someone develops SOD1 ALS and they have access to this treatment, their prognosis is going to be a lot better. And again, this is what we hope will happen for ALS and for lots of other diseases, for different forms of cancer where we are seeing remarkable progress, for other genetically linked diseases that, whether they be rare or whether they be common, this is what we hope happens, right? That discovery leads to treatment, leads to turning something like HIV, which was, at one point seen as a death sentence, into a chronic manageable condition. And we need to take that into account when we're considering the risk we're associating with folks that have just, again, the genetic test for a disease. So, again, a couple other factors to consider as we're talking about this. Really, the crux of the issue from a patient perspective, a consumer perspective, is we are hearing anecdotally, and I would love it if there were some holistic data source for this, although we've not been able to find one, but what we're hearing repeatedly and anecdotally is that people are coming up against the question of, do I get the genetic test. I know I've got some family history, whether it's of ALS, of cancer, Parkinson's, whatever it might be. Do I get that test knowing that it could help guide my own health decisions, while I know that it also might limit my options for life insurance, long-term care insurance, disability insurance? And this is a key issue, and I'll again speak to the ALS portion of this. When you talk to a family that has just gotten an ALS diagnosis, the spouse, the kids, the parents, everybody else in the family tends to be focused on the health impact that the person with the disease is going to face. It's not always true, but what I've found is often when you talk to the individual who's just gotten this diagnosis, they are often concerned with the financial impact their disease is going to have on their family. You know, the ALS is sometimes called the bankruptcy disease because you will run through all of your savings, your home equity, your kids' college fund, you're going to beg, borrow, steal, do a GoFundMe, all of that. And still about 20 to 30% of folks with ALS end up spending down to the point where they enroll in Medicaid for additional services. This is something that happens to all but the most well-off of folks that develop this disease. So the financial worries are extreme, and they are a burden, not only long-term for the family, but in real time for the patient that is worrying that they are doing this to their family, and it can lead patients to different decisions about their own health and what treatments they seek. So having the option of keeping life insurance, of if they've got a genetic test, going and being proactive about that, knowing that they may develop this disease, they may not, it might not be for 40 years, but having some ability to do that it solves a central worry for folks with the condition we serve and many, many others across the health space. So now let's get into, one last slide, then we'll get into the meat of the bill. We've seen a number of bills introduced in New York and Maryland, in a number of other states here in Illinois actually as well, that would get at this problem. And I think it's right that there's a lot of different approaches, a lot of different attempts to solve this. And it is going to take further conversations. Jan and I were just talking out in the lobby prior to this, and what we both want to do is continue our conversations together, and I think hopefully continue the conversations amongst this group and others to find the right path forward. But as we find that path forward to a point where genetic information can be used responsibly, and it is not a situation where we're in the Wild West, where this new tool, this new powerful tool can be used and probably not, hopefully not, but could potentially be weaponized against patients, I think it behooves us to go slow, to set some rules of the road to ensure that there's guardrails that are going to protect consumers, also protect the market overall. We want a strong functioning market, and that then we're able to get to an outcome that will serve us all. So, I'll just briefly go through the provisions of this. This is probably the one where we had the biggest change, the biggest addition here. You can see my suggested edits down there, and the word deny should be bolded. I don't know how that one escaped. But when we're talking about the ability to use genetic information, as a starting point, we would suggest that it not be open to use whatever tests are there however you'd like. We think it makes more sense to start from a point of caution and then add in ability to use genetic information as it's proven to be effective both for patients and for insurance. And again, the insurance market was built without any of this. So it should be able to function just fine without it as we slow down and figure out how to get our heads around this collectively. So we would suggest saying that coverage should not be denied, limited, or rates increased irresponsibly due to somebody's genetic test. Now, that's not saying due to somebody's diagnosed condition. That's a different animal. But if we're talking about the potential of one day developing a disease, maybe years, maybe decades down the road, that may or may not have effective cures by then, that risk shouldn't be built in to the initial decision on whether to cover or the initial rate that individual will then be locked into for life. Because it's kind of buying in the dip of this condition has been discovered, but it has not yet been effectively mitigated or cured. I don't think that's fair for consumers, and we don't want to end up in a place where more and more people, as these genetic links are discovered, are discriminated against based on their genetic code. So that would be our change to that. The next section here, really when we're talking about not allowing the mandating of genetic testing, we're wholeheartedly in support. We had a couple of, some of the lawyers in our organization had a couple of thoughts as to how to strengthen and tighten up the language a little bit, but we're very much in support of this provision. It's just a little bit of a rewording. So I'll move on to the next. This piece, this is one of the ones that often has confused folks that I've seen engaged in this conversation. Saying that you have to give express written consent for use of genetic information sounds at its face like it might solve the problem. The issue, however, is that your genetic information, your genetic test results are going to be part of your medical record. If they're going to do you any good, if you're going to be able to get one of these genetically specific targeted medications, it has to be in your medical record. For your doctor to prescribe you that information, for your health insurer to pay for that medicine, those genetic test results have to be in your medical record. And as we all know, you have to give access to your medical record to an insurance company if you're applying for life insurance, as is kind of right? So saying you have to sign something saying that you can access my genetic information is the same as saying you can access my medical record, which is basically table stakes for applying for life insurance. So again, this is one of those provisions that looks like it is doing more than we think in reality it is. Because again, you're going to have to provide this as part of your general application. If it were separated out, if it were made its own standalone consent form, and it was clear that the insurer couldn't then say, well, in that case, I'm not doing business with you, take your business somewhere else, that would be something that I think would have more teeth and would have more efficacy for consumers. But that is the edit that we would suggest here. It is kind of important to think these all the way through. And finally, the last major provision here, when we're looking at the use of genetic test information, we think it's important to make sure that it's also your family members' genetic test results as well that might not be considered there. And again, this is really just a tightening up of the language. By and large, the bones of the draft bill, I think, are very workable. I think it needs tightening in a couple of areas to make sure that consumers are adequately represented in the protections this would offer. And again, the impact of that should be very workable for the market because it's how the market functioned for most of its 270-odd years. Finally, as a kind of a thought experiment, we also just have some model legislation that we would normally start from. It's actually pretty similar, but I added it in here as it's an easy place to look and see what our thinking was around each of these specific provisions. And I'll note that the great state of Florida has had a very similar law in the books for about 5 years. Now, the Florida law, like many laws, it's kind of fitting into existing statutes, so pasting it into a PowerPoint was going to be lots and lots of pages of other statutes that wouldn't really pertain. So I put just the model legislation language, but it is substantively the same. And this is, again, a law that has been functioning well in Florida for many years. It's a law similar to those on the books in Canada and the United Kingdom, as well as in Australia. So we know this is a road-tested policy, by and large, and we have not seen any mass migration out of the Florida life insurance market. We haven't seen premiums skyrocket. We haven't seen insurers close up shop and say we're not doing business here anymore. So again, we think it is workable, and we think it is a proof point that moving slow, starting from a point of we are going to be deliberate of how we allow the use of genetic information, as opposed to saying it's Wild West, use whatever information you want, and we'll be deliberate about perhaps how we claw back some of that later on, is a better model to start from. I think that'll be ultimately more workable, even for the insurers, though they don't get used to having a certain set of information and then in years future having to have some of that capability clawed back. So with that, I'll leave this in your slides that you can peruse at your leisure. And I'll just say this: we are willing and eager, in fact, to work with you. There's a lot of groups from the cancer space, from the Parkinson's space, kidney space, rare diseases like ALS that are coming together on this issue. We would love to lift up the consumer's voice, the patient's voice, and make sure that whatever's decided here is going to be a fair set of guardrails that, of course, can be adjusted as time goes on. And I'll mention there's one thing that I've seen that potentially has some efficacy out of England as we're looking for other policy models, where in order to protect against adverse selection, what England has done is decided to say that they're not going to use any genetic information in underwriting decisions up to a certain value of the policy. And I believe they set their policy limit at 500,000 pounds, about 640 grand for us. Any policies below that, there should not be use of genetic information. Any policies above that, there can be. Now that is protecting against someone, again, getting a test and saying, oh, good God, I'm gonna go take out a $10 million policy tomorrow. That would be adverse selection. We don't want to see that necessarily because we want the market to function. We believe, again, there are policy options that can protect against that while they still protect against consumers and against potential discrimination. So thank you very much for your time. Happy to take any questions and look forward to this continuing conversation.
Well, thank you, Alex. And we're going to hold all questions until we hear from both presenters. So Jan, the floor is yours.
All right, is this on? Can you hear me? Oh, okay, I'll use yours. All right, I'm Jan Graber, Senior Actuary at the American Council of Life Insurers, and thank you for giving me the opportunity to speak to you today. First of all, I just want to say thank you to Representative Carter on the current draft legislation. We really appreciate the thoughtful approach that is reflected in that version, and we think that it really strikes a reasonable balance between protecting insurers and also ensuring that our products remain accessible to individuals. I know ACLI previously presented on life insurance and risk classification in a prior meeting or presentation to this committee, so I won't get into all of that. But I think that the overarching message is that we completely support consumers having access to genetic testing and the information that they need to live a long and healthy life. So we're not trying to discourage that. Our advocacy shouldn't be misunderstood. So maintaining access to genetic information and life insurance underwriting shouldn't be conflated with opposing genetic testing itself. In fact, we want consumers to get testing, not avoid it. Our concern is very specific, ensuring that both the applicant and the insurers have access to the same information when entering into that insurance contract. Our policies are long-term contracts. We cannot cancel the policies once they're issued. We cannot raise rates. So, you think about an analogy is I have a home and I find out that my foundation is cracked. So I decide I want to sell my house. If I don't have to disclose that to the buyer when we enter into that negotiation, it's an unfair negotiation. And the buyer is at a disadvantage and will most likely pay more than they should for that home. So, and I think Alex alluded to this as well, from a life insurance perspective, if I find out that I have some dread disease that significantly impacts my mortality, I want to protect my family, and so I may end up purchasing more coverage than I would have had I not had that information. So, again, our focus is on preserving balanced, fair underwriting and keeping life insurance affordable for all our consumers. And I think, in listening to Alex, I think our values align. We want people to have that information that they need to live long and healthy lives. But we also want consumers to have access to the financial products that we provide. So again, overarching message is information symmetry. Buyer and applicant and insurer need to be on the same page. I'm happy to talk about specific provisions within the draft or any, response to anything Alex said, but I think that's the main point that I'd like to get across today.
Thank you, Jan. And we are going to open it up for questions now. We're going to wait for Ann. Yes, thank you. Really appreciate this discussion on both sides. Very informative. I'm glad that you guys are initially working on this as a collaboration between both sides, seeing the benefit for the consumer as well as for the industry. So now we will see if there's, Representative McFall from Michigan.
Thank you, Representative. A quick question. So I actually, when I first got elected, I actually came from the same world as Alex is in. I worked for a rare disease organization, so I'm very, very familiar with a lot of the chatter around this topic with a lot of the families that we worked with. The issue that I have, or the question I suppose I have though, is that just because there is if you hand over your genetic information to an insurer, a life insurer, there's not always a guarantee that you're going to develop that. And so if you are handing that over and you never develop it, but you based your rates on that, isn't that, like, because you used the analogy of a house with a foundation that was bad, but the foundation is bad. That's not the same, in my opinion, as someone having a marker or something in their genetics that's going to automatically make them have whatever it is. So I'm not exactly sure, I understand what you're trying to do, but I don't think that analogy really works just because not everybody always develops everything. So can you expand on that?
Yeah, so what I would say is that, in our underwriting, it's a holistic evaluation. So we're not just looking at one factor, like, do you have that genetic marker? We're looking overall. We recognize that there are some genetic mutations that indicate you will get that disease, like in the case of Huntington's. There's also markers that are more predictive, and it will depend on lots of different factors. So, for example, if you have a genetic marker for the BRCA gene, we're not just looking at that. We're looking at, are you getting regular mammograms? Are you seeing a doctor? What are you doing? What's your lifestyle? What are you doing to address that potential threat? So that is taken into account when we underwrite. Your lifestyle, it's not just, this person has this marker and so they are rated up, 50%. We take into account all of those things. Does that help? Yeah, sorry.
Thank you. Representative
Stole
Mayfield.
your mic.
Thank you so much. Alex, you brought up some very good points. I'm interested in possibly doing this in Illinois, so I would like to exchange information. But I did have a couple questions. In this particular legislation, I did not see a cause of action, a penalty for these life insurers who do upcharge, and how are we going to enforce this? Can anybody provide me that? Because I very much would like to sue them if they do it. So.
That is a great question. I don't know if we've come to a conclusion of the best way to approach that. It might be a state by state based on what else is in code. I think we'd certainly be open to helping to explore that. The hope, though, is that we get to a place where they won't do it, because I don't think they need to necessarily use this information. And to Representative McFall's point, what we're trying to avoid here is pricing in the worst potential outcome when it's only a potential outcome, right? So it's a little bit, I was doing some work in Indiana earlier this year, and I don't know if we've got any Indiana members with us at the moment, but just before Sine Die, right when they were just finishing their biennial budget, there was a new revenue projection that came out. and it was pretty dire. It was right after some of the tariffs had gone into effect, and all of a sudden, the revenue projections were looking very bad. It was in that early April timeframe where all of a sudden the stock market took a 20-point dip. Well, that's when the revenue projection came out. That's what they then had to budget to, and that's why they cut about $5 billion from the budget in about 3 or 4 days or something like that. And then what happened a week or two later? Well, the markets rebounded, right? The markets came back. That revenue projection based on that impact that was being considered then, in retrospect, looked entirely too dire, right? So folks were kind of forced to budget in a worst-case scenario that then didn't come to pass. That's what we want to avoid here. We want to avoid folks getting locked in because, Jan makes a good point, right? So the insurers are locked into providing this information at a given rate, but the consumers are also locked in to a degree of paying that rate. And often consumers maybe get their insurance from their employer, but if and when they develop their disease, they're going to lose that job. They're going to probably lose that insurer-sponsored life insurance. And so they need to be able to go on to the private market and buy insurance before that happens, right? That's what we would kind of suggest. I'm sure it's what you would suggest too, right? That people go and buy their own insurance. We don't want them locked into a worst-case scenario outcome that may not come to pass.
And Rep Mayfield, one of the things we're doing with this discussion is open it up so we can get feedback from the legislators as we move forward in crafting this. So I really appreciate that question. That was a very good question. Okay, we have Representative Hefner.
Thank you. Thank you for taking questions. My sister-in-law, she was diagnosed with ALS and dementia when she was 43 years old. They gave us a prognosis at that time of 3 years, and she did. She passed at 47. But from those 3 years, the amount of care, just increased. At first, it was slow, but it was intense. The collecting of genetic markers for for their children, they have 4. They're all young. If this was on their, record, as life insurance, I sell that. I understand that when underwriters take information, that is included, whether they're healthy or not, which can cause them to not want to purchase something that at a young age or when they first start out their family would be something that they wouldn't think would be something that was needed. So I think all that information, my son was denied life insurance because of a rare disease that, as the president of an international association for this syndrome, knowing the information that underwriters used was pretty much wrong and very old. The attitudes and the misunderstanding of doctors that are part of these underwriters can cause families to not be able to protect their family. And so I think that I understand the attitudes about it. My question is that there's got to be other ways. This is a good bill that if we're denying some coverage because we know things too early, maybe, or making it so out of reach for the cost. I think this is a really great bill. My question is, how do we at least update what underwriters do and with this information to not make it so that it's impossible for families? Because we're still using that same sort of understanding. Like I said, old information. It's so needed for these young kids, for my 4 nieces and nephews, to have this coverage, but it could be out of price for them.
So I would say that, it's true that data and information changes over time, and we get more and more information and more medical advances and that kind of thing that can extend lifetimes. And so what we're looking at is what is available at the time of application. And so is based on that data, and that's when we issue, the policy is issued based on that information and that data. Now, if there's data that changes over time, there's nothing that would prevent a person from going and applying for another policy. insurers that a lot of times they will, underwrite again if asked. We can't do it as an insurer automatically, but for example, if you were underwritten based on a family history of breast cancer, and then years later find out that you don't have that genetic marker, you can get re-underwritten at that time. And, if the rate is better, you can get that rate. If it's worse, you can keep the policy you still have. So there's an opportunity to take advantage of information that has evolved or shown advancements that would help improve your mortality or morbidity.
I would add to that, if I could, that is asking a fair amount of consumers to, for one, be up on the research that comes in. It can be hard to know all the research that's happening. And prepping for this, I had quite a long and confusing at first conversation with some of our PhD research folks to talk about where we are in various clinical trials. And again, the main takeaway was just the rate of research is so much higher now than it has been, and I don't think that's unique for ALS. So I think the rate of new discoveries is going to keep picking up, and I think it would be very, very difficult for any insurer to be up on all of the latest advances that are happening. It's almost an impossible ask to make of them to take into account all of those things. And what's going to end up happening is, even if someone, there's a new advancement, somebody says, okay, now I think my prognosis might be better if I do develop this, I'd like a new policy, is that going to translate to an insurer? It's putting a lot of burden on patients and consumers to move forward with that.
Thank you. That was a very good question. I was listening intently to that. Okay, Representative Meskers.
Thank you. I was listening to the policy proposals and trying to understand the risks we're trying to mitigate. So when I qualify it, when I think about health insurance, we deal on the basis of pre-existing conditions and non-exclusion, which basically allows us all to pool the risk for the groups. Now, I guess we've got two issues going on here in the scenario. One is the genetic testing gives rise to a prognosis with a potential illness, and that may give rise to incremental demand for life insurance, because now you're facing a prognosis that your life may be curtailed, and you're worried about the family and the resources. So I thought the issue of genetic testing and excluding was interesting, and I liked that. I thought the discussion about, I guess the Europeans, about a cap on amount of insurance to be available without the exclusion for people, because both of those deal at some point with the pooling of risk. And I think that's the essential issue that needs to be dealt with and I don't know that the bill talks about the mechanisms, because it might be more in the secret formula and pricing models, but I think the pooling of risk is the essential problem when you're dealing with genetic conditionality. And I'd probably like to hear potentially a further thought on that, because I don't think we want to exclude people from life insurance, given the fact that they've been given genetic testing and information. And if the testing gets more and more sophisticated, the discrete pool is going to be at a point that you're going to be uninsurable. If I come out tomorrow with a genetic test that tells me I'm dead in 2 years, good luck finding an insurance policy that doesn't price exactly for the benefit. So it's going to cost me $1 million to buy $1 million policy. So I think the question is going to be, how do you work on those issues of the pooling of risk to try to make sure that insurance is affordable, and whether it's the exclusion of genetic testing or dealing with the definition of pre-existing conditions on long-term insurance. Love your thoughts on that.
Well,
Not long-term, I mean life insurance, sorry.
Right. I would start by saying just, one thing you mentioned about, excluding people, just to be clear, and this is something that a work colleague often says is, we are not trying to deny coverage. We want to issue as much coverage as possible. We're the Costco, we're the Walmart. We want to find a way to insure people, because if we don't insure them, someone else is. And so, it's again, keeping in mind that it's that symmetry of information, that we want the same information you have, and if that information, if there's a balance of information, then we can price that risk accordingly. So, you still have your pooling of risk, but you're able to price a product to be reflective of that risk.
Excuse me, but that's the question, because I can't price a product when I have certainty, or I can price it with certainty that makes the product unaffordable. And that's the basis of, in regular insurance and casualty, is a sharing of the lack of knowledge and a pooling of risk. Here, we're going to end up with precise knowledge that may exclude people from the market. And that's what I'm suggesting, is we may have to figure out a definition of the pooling.
Right. I would say that the risks are still pooled, and that, again, there are unfortunately some conditions that are uninsurable. And that's just a fact. You cannot price a product for some conditions that have a life expectancy of 12 months, right? That said, again, we're trying to take the information we have. We do still pool the risk, and what happens is we have a price that's reflective of that risk. There's no certainty in most of these conditions. Again, it's your lifestyle. What are you doing to help prevent that condition from coming to fruition? That kind of thing.
Okay. In lieu of the time, we are going to continue this discussion outside of the meeting, but we have time for just one more question, and that's from Representative Tedford.
Thank you for allowing the question. It got partially answered by your response to Representative Hefner, but I was curious of maybe who is getting these tests, and at what point. Are people getting tested because of family history, and that's why they're getting the test? And acknowledging that many life insurance policies already ask questions about family history, and there may be two sides of this testing, meaning that it could be just right pricing the life insurance, because if someone has family history and they test negative, then it's a better result for them for life insurance. But again, back to the original question is, at what point are people getting these tests, and what's their motivation for getting these genetic tests?
Sure. Well, I think probably individual motivations will vary, but I'll give you a couple of for instances. There's a young woman in Tennessee who has a family history of ALS. Her grandmother died of it, her father died of it, and she was newly married. They were thinking about starting a family and debating adopt or naturally conceive. And one of the things she wanted to know is, would I be passing on this gene? So that's a decision that then she made to go get tested. Again, not everybody's in that exact situation. I would think it would largely be based on family history, but again, there's a difference between pricing and risk based on diagnosed disease and pricing and risk based on genetic potential. I would also note that, for that woman or somebody else that might go and get genetic testing and then go buy life insurance long before they've actually developed the disease, they probably wouldn't have bought life insurance quite that early. They're going to be paying premiums for years and years, hopefully many, many years, before, if ever, they develop that disease. So they're actually going to be kind of expanding a little bit of market coming into insurance, because otherwise they probably wouldn't have bought life insurance on the private market until later. So this does have kind of a dual effect, right? You are, to a degree, expanding the universe of people that might go and buy private insurance earlier in their lives than otherwise they might have, because they know that there's a potential, and they know that if they do become symptomatic, if they do develop a disease and secure the diagnosis, it might be impossible to buy that policy. And if they wait until then, the premium might have to be quite high, right? Whereas if they buy it now, and then hopefully, again, this young woman is in her 20s, her father passed away in his 50s, her grandmother in her 60s or 70s, that gives her a good, 20, 30 years, hopefully, if it follows the pattern, where she can be paying into a premium, paying into a policy that will one day pay out. That's, I think most people, how they want it to work. I don't think anybody walks into this saying, I've got a genetic test, I'm going to go buy an expensive policy, and then I hope that I actually develop this, fatal disease, because then it'll pay out more. That is not anybody's thinking to this. They might be thinking, oh, I've seen this happen. I know exactly what the financial burdens on families can be. I know that I would likely lose my employer-based coverage. I should, be cautious, go and buy that insurance sooner. And so I think those would probably be some of the factors that would influence someone's decision to go and get testing and buy insurance. And honestly, again, it's happening more and more frequently as there's more diseases that do have genetic links. There's more reasons for someone to go and get that testing. I think it is going to become very commonplace in the coming years and decades, which is why it makes sense to get our heads around this now.
Okay, we're going to wrap this up. This discussion up has been vibrant. Okay, I'd like to thank both Alex and Jan for bringing this discussion to us. We are going to continue this dialogue at our next meeting, which will be in Atlanta. If anyone has any questions that they would like to ask me or the presenters or the staff here at NCOIL, please feel free to reach out to us. Thank you so much, presenters, for this. We'll see you in Atlanta, hopefully. Next on our agenda is a presentation on the latest trends in life insurance and annuities. And I'm going to take a minute to give a shout out to someone who inspired me to go after my life insurance and health insurance license. And David Zivel, wherever you are, this is for you. Thank you for pointing me in this direction and teaching me about annuities. With us today is Dale Hill, Managing Director of Research for the Society of Actuary Research Institute. Dale, thank you so much for being here. Please go ahead.
Okay, thank you, Representative Carter. Good morning to everyone, and thanks for this opportunity to highlight some of the current trends happening within our life insurance and annuity markets to the committee this morning. And I'll add welcome to Chicago. Thanks for coming to our Society of Actuaries hometown here. Hope that you have an opportunity to see some of the sites and what makes Chicago a great place to visit during summertime. So just some quick information about our Society of Actuaries Research Institute here. Research is a core part of what the SOA, the Society of Actuaries, has as its mission for our 35,000 plus members all around the world. One of the things that we pride ourselves on for sure is to bring new experience studies, new analysis, new practice research, and thought leadership, not only to our members. Many of our reports are used well beyond just the actuarial profession. Our members use the research that we provide in conjunction with the work they do with their employers, but we certainly have regulators and legislators as part of our stakeholders, and many of our reports too have a very public use for them as well. We continue to study things like population mortality trends, socioeconomic differences in mortality, longevity risks, social determinants of health, and other things like that. And we certainly pride ourselves that just like our actuarial profession work would be, our research is very objective and data-driven, and that gives us, I think, a strong voice when it comes to showing how facts are influencing and being part of the insurance and financial services industry. So I did pick three kind of key topics quickly to highlight here, some important trends that are happening across the life insurance market and annuity products here in the U.S. A key one that I would note would certainly be this strong and growing focus on annuity product lines in recent years. You see on the screen here in 2024, using some data from one of our research partners, LIMRA, who produces individual annuity sales information routinely. Annuity sales exceeded over $434 billion in 2024, and there's strong growth continuing in that market in 2025 as well. You'll even note from the graph here that number on the right-hand side, has grown to be even double of what it was just a few years ago back in 2020. Clearly, some key both economic and product innovation drivers that are behind that trend, causing those increasing trends in sales. One of them clearly is just higher interest rates. We're now to a point in the last 12 months where the 10-year Treasury has grown to be over 4% and compared to 1 or 2% range a couple of years ago. So that certainly leads to a higher propensity for people to be interested in fixed deferred annuity sales. They may be able to get a crediting rate in the 4 or 4.5% range. That's attractive for customers and consumers who are using these types of products for saving for retirement. I'd note as well there's been a growing trend in what the acronym would be RILA, Registered Indexed Linked Annuities, which is a new product type over the last 4 or 5 years. Predominantly, these types of products have attractive to consumers a middle ground for distribution and consumers by providing some equity index exposure, but also sort of limiting the downside risk through some insurance protection that are offered in those products. I would say as well, there's also been a smaller but noticeable growth in the market for payout annuities to help cover more longevity risks that consumers are facing. I think that's especially important in the U.S. as our population ages, and now retirement plans, as we know, are focusing a lot more on like defined contribution, building up a balance instead of defined benefit or pension plans. The level of interest rates being higher in some recent years does offer opportunities as well for covering combinations of risks. We've seen a little bit of growth in renewal and focus on long-term care combination annuities in recent years. Typically, those products would offer benefits for someone who has long-term care needs and even some additional insurance protection should the account balance be fully spent down due to long-term care benefits being paid. So I think it's encouraging to see consumers, distribution carriers focusing on ways that these products can cover a variety of retirement security risks. I just note that another trend that we're seeing is over across the industry, just an increased focus and interest in the need for strong experience studies analysis. A lot more companies focusing internally on what their experience results are in the current area and then aggregating together with us in industry experience to provide really helpful, broad, aggregated insurance industry studies. Our research institute has a partnership with LIMRA to actively work with well over 30 direct writers who help us collect information, and they help us suggest what types of studies we should be doing, not only just mortality, but a lot of products now have a variety of contingencies that need to be studied. I'll note that even some of the most recommended and currently used studies have been on things that involve policyholder behavior and policyholder contingencies. As insurance products get a little bit more complex, offer more options, companies are looking to study and use in their pricing and their financial projections and the way they set reserves and capital, that the topic of policyholder behavior. So we've been working on things like recently released universal life premium persistency analysis. More flexible life insurance products require a look at what the premium persistency is and how consumers are depositing or keeping in tune with the guarantees of those products. We've been working a lot on term conversions, as those policies convert potentially to whole life, or what are the resulting mortality trends as you get towards the end of a level term period and or continue past the level term period into an annually renewable term phase. And then, as we mentioned, with the annuity products, a lot of focus on variable annuity, RILA, fixed rate annuity policyholder behavior. As equity markets move up or down, interest rates change over time, that becomes stronger tendencies for policyholders to review what their options are, see what the different options are. Are they in or out of the money? Should they be looking at new products? And as a result, definitely studying more policyholder behavior and what those tendencies are. And then, finally, the third thing I chose was just to highlight this current focus and discussion, this transition to principal-based reserves for fixed or non-variable annuities. There's a couple product lines that already have principal-based reserve focus, variable annuities for sure, and in the last 10 years, life insurance with its wide variety of product types and underwriting classes has focused on more principal-based reserves approaches rather than just, here's a formula, go calculate it quickly. A lot more actuarial modeling goes into the setting of these statutory reserve calculations and determines, how much reserves companies should hold, maybe even gets into their capital calculations. And that's now being transitioned to look at what those methodologies are for fixed or non-variable annuities at the NAIC. A lot of current focus on, how should that modeling or what should the methodology be there? How should it evolve? There's been a lot of helpful industry tests to say what is the impact on products and offerings from principle-based methodologies, what's going to be the impact on future annuity products that are offered and issued. And perhaps even, stemming off the last slide, as you transition from formula-based approaches to principle-based approaches, there's much stronger need for understanding experience and analysis and what's happening with policyholder decisions and mortality on the products. So there's a lot of various exposure drafts that have been issued. I'm sure at the NAIC meeting coming up in a few weeks in Minneapolis, that'll be a strong conversation. It's likely to become an option for new business starting the 1st of next year, and then some sort of transition to mandatory principles-based reserving if it gets approved. So with strong annuity sales and many companies having large amounts of annuity reserves in force, certainly trade industry groups and others are studying what that transition would look like. So those are the three main things that I thought would highlight here. I'm probably a little biased that some of these had a little bit of actuarial flavor to them, but I think they're important trends to be aware of. A lot of great ways that the life insurance industry is offering protection and retirement security products we've seen grow in the recent years. And so I just pass it back to the chair to see if there's any other questions or clarifications I can offer on those.
Thank you, Dale. And before we open it to the legislators, I do have a question.
Sure.
Thanks to David. Can you first of all explain the difference, not the difference, but actually life insurance versus an annuity, and which one would be most beneficial for those requiring long-term care?
Yeah, obviously long-term care policies that are standalone that, industry has offered for 20, 30 years or more, but you're seeing a lot more combination of long-term care with life insurance policies or with annuity policies. The long-term care life insurance combination is typically if someone develops long-term care needs, has activities of daily living, the benefit there is to kind of like write down the policy's death benefit early before death occurs and give some flexibility, before even the death occurs to offer benefits. So that's a strong combination in one product offering. The annuity, and maybe that's appropriate if you're looking for smaller face amounts or don't have the ability to put large amounts of deposits into one place at one time. You can kind of pay for that in a level premium fashion over time. The annuity products typically are situations where someone might have $25,000, $50,000, $100,000, saved for retirement, can put that into an annuity product. There is a cost of insurance charge that is offered against that balance, but then you have an account balance that says I've got $100,000 in this balance. If I don't need it for long-term care, then it becomes another part of my retirement savings. Or if I have long-term care needs, I start to draw down on that balance, even to the point if I fully withdraw that full balance, it would offer past the zero balance additional long-term care benefits and needs. So there's, the short answer is probably a personal preference, but I think it's an important thing to look at a variety of ways to cover that type of long-term care risk, whether through an individual product in combination with life insurance or in combination with an annuity product.
Thank you for that answer. I have another one off record.
Sure.
Okay, Representative Dunnigan.
Thank you, Madam Chair. You talked a little bit about the payout on annuities being higher now with higher interest rates. So my question is on immediate annuities.
Yep.
Are you seeing a higher payout on immediate annuities now than we were maybe 3, 4, 5 years ago when interest rates were lower?
Yeah, interest rates are certainly going to be a part of, potentially offering some higher benefits. Obviously, I think the simple answer is, the higher interest rate environment or more corporate spreads or things like that, the larger that the insurance company can take those deposits and invest in, that can give more benefit to pass on to the policyholder. So if you start to, track what those payout rates are, there is some tendency, for those to be able to improve as investment yields grow.
So they are higher now than they were 2-3 years ago?
Yeah, I think there's a lot of factors that go into that. Mortality is different than, the pre-COVID and COVID era and things like that. But I think there's an opportunity that, in general, some of those rates are higher.
Thank you.
Okay, thank you, Dale. We're going to move on in lieu of time to our final person on the agenda, and it's an update from the Interstate Insurance Product Regulation Compact activities. With us here today is Karen Shutter, Executive Director of the IIPRC. For those not familiar with the IIPRC, it's an important part of the insurance industry as it streamlines the approval process for life, annuities, disability income, and long-term care insurance products across member states. Karen will be updating us on the latest activities. Karen?
Hey, good morning, Representative Carter and everyone. Thank you for letting me update you on the Insurance Compact. That's what we all know, those in the know. And there's several of you around the table that actively participate in the compact. So let me just tell you really quick what the compact is. It's a state regulatory and legislative partnership that was created in 2002 to 2004 through efforts with NCOIL, NCSL, and the NEIC. You had governors involved as well to come up with a compact, an interstate compact for insurance. Many of you I know right now are seeing across your desk occupational compacts. Ours is somewhat similar in that states are coming together to make it more efficient to do business on a state-by-state basis, especially with the products that you've heard from today. And these are life insurance, annuities, long-term care insurance, and disability income insurance. And the thing they have in common is that they're long tail and that they're based on mortality and morbidity. That really it doesn't matter if you are living in Illinois or my state, Missouri or Michigan. They really should be and are considered a national product. But they're regulated at the state level. And back in the 90s, when the walls were really erased between securities and banking products, which are regulated at the federal level, there was a push. You don't see that push today, but there was a push for federal preemption. And that is really the why behind this insurance compact. So you really, going back to the why is always important, because today, what the insurance compact does, we're now 15 or more than 15 years into our operations. We bring states together to do what we call develop uniform standards, and those are the standards that apply to the content of a product that a life insurance company or an insurance company can file to us as an arm of all of your compacting states. That's what the statute is. When you enact it, you have to enact it. And so today, there are, we call them 48 compacting states. You can think of them as 46 states plus the District of Columbia and Puerto Rico. So those states that have not yet joined the compact are New York, Florida, and California. We did have South Carolina repeal the compact, but hopefully they will rejoin here in the next few years. And we have one of the cool things about this compact, I guess if cool is a word you use in these, is that we have a legislative committee, and they are very active. So we have several of them around the table. We have the chair of the legislative committee, Representative Matt Lehman. We have Representative Jim Dunnigan, who's been a long time on our committee, as well as we have Oklahoma Representative Ellen Hefner, who's just joined our committee, along with Kentucky Representative Sarge Pollock. And then last year, Massachusetts Representative David LaBeouf also joined. We also have Senator Fine from Illinois. We have Representative Kennedy from Rhode Island, and Delegate Jeffries from West Virginia. So you are well represented at the compact table. Our officers today are Nebraska Director Eric Dunning, West Virginia Commissioner Alan McVeigh, and Director Beth Dwyer, who you will hear from. So again, we've talked a little bit about the what is, the why. We do have meetings, and they're usually in conjunction with the NAIC meeting. That's where you see regulators, several legislators come together. We do the business. Your chief insurance regulator is the member to the compact. Very active engagement by your commissioners. They're looking at a standard before it can be adopted and then applied. And then one of the things we've been doing lately is compact roundtables, where we bring together commissioners, regulators, state legislators. I know there's several in the room that have been, as well as industry, consumer representatives. Bring them all together to talk about how this creature of state law can continue to bring efficiencies to the states and to the industry. And every time I'm at this table, I want to remind our states that the compact is completely revenue neutral to our states. So when a product filing that would have gone state by state by state is submitted to the commission, all departments that are part of that will see it, and the filing fee that you would collect is still collected and remitted. So it's revenue neutral. We do the work for you. It's a value add to the industry. One thing I did want to mention, and that is something that your organization has been closely following, is a new concept that the compact, now that we're many years in, is looking at. It's called the Consultation and Advisory Services Office. The other thing we've done, and you face this with attrition, retirements, especially retirements, is that you are losing seasoned experts in your department, and I know that's something you have discussed. Well, we have that expertise at the compact. We have credentialed actuaries, we have regulatory form reviewers. We give a very careful look to all those products. So can we help the states beyond those products that we approve today? Can we help them when they see a product that might not necessarily be with the compact? So we're talking with that. Legislators have been really involved in making sure that we don't color outside the lines, so to speak. So again, I just wanted to give a shout out to the legislators that are very active. And one of the things we did, and we have for you, and we're going to leave it up at the table, it's in alpha order, is what we call a value of services. And we're going to give this out to all of your regulators, and hopefully they'll share it with you and your committees. And it just shows you the value that we are providing to you in terms of the fees we collect and what it would have cost if we weren't here doing that. And I pulled Michigan's, and it's $1.47 million that you're getting in a value of services for just this year. So I would encourage you to look at it. If you don't see your state, come find me. I will be here. So thank you. I'm happy to answer any questions.
Thank you, Karen. I definitely want that, my Michigan colleagues who are here all smiling over there. So legislators, do you have any questions? Representative Lehman.
Yeah, more just a comment. First of all, I want to thank Karen for the work you've been doing over the years. We did kind of get, I don't want to say call the word sideways. I know a year ago we started to have some concerns with where this new concept was going to go, and felt like it was drifting into the regulatory, into the legislative lane. That's been pulled back. I think if you were here a couple meetings ago, you may have heard us talking about that, and that we did have a conference meeting, a call a couple weeks ago. And I know that's been pulled way back. And I think they're in a good place. The compact has served very well. I know companies that are domiciled in Indiana have been very appreciative of the compact with their market, their products. So we'll continue to work and move forward on this, but I just wanted to thank Karen for the work she did on kind of getting us back to, I think, a good place.
I want to thank Representative Lehman. And one of the things you'll see if you come to a commission meeting now is the legislators are at the commission table. As a committee, you are just part of the compact. It is a partnership. So.
Absolutely. Thank you again, Karen. I do attend NAIC as well, and we'll be looking for this. Okay. Is there any other business before the committee today? Hearing none, before we adjourn, I want to note that up next is a meeting of our Joint State-Federal Relations and International Insurance Issues Committee in this room. We're going to take a very brief, quick 5-minute break and then go right into that meeting. So, hearing no further business, I'll entertain a motion to adjourn and a second. So move and second. I do know Senator Alki, your name? We don't. The next. Okay. All right. Yes. Herrick. Okay. All right. Hearing no more, meeting adjourned.